The Fed pivots. Hey, it's Eric Osnes here with ericismybanker.com and CMG Home Loans with my weekly update on mortgage rates for the week ending December 15th, 2023. Obviously, I'm not in Seattle right now. We're broadcasting from Camaling in the Philippines, where I've got some carabao behind me keeping track. What they're doing behind us here is they've got some pumps running and they're flooding the fields right now. That is rice that they're growing there, and we're in a farming community of what they would call the provinces of Camaling. But back to rates. So let's talk about the Fed. The Federal Reserve is a nonpartisan agency. Their mandate is to control inflation and to maintain full employment. The Federal Reserve Open Market Committee, the FOMC, uses interest rates to tighten or loosen the supply of money, which in turn will restrict or stimulate the economy. The only rate that the FOMC can control directly is the federal funds rate, which is used as a benchmark for many other indexes such as prime rate, business loans, car loans, all types of different, credit cards, all types of different indexes. And although the Fed funds rate does not directly affect mortgage rates, it has a significant impact on the economy, which in turn influences mortgage rates. That's why we care about it. The FOMC is comprised of 12 members from the Federal Reserve System. The chairman, Jerome Powell, 7 members of the Board of Governors, the president of the New York Federal Reserve Branch, and then 4 other presidents from other Federal Reserve bank systems that are interspersed throughout the country, and then they rotate on a 1-year basis. The FOMC has hiked interest rates, the federal funds rate, 525 basis points, that's 5.25%, since March of 22, in an effort to control what was becoming runaway inflation. Hiking is intended to slow the economy by making it more expensive to borrow money. As a result, buying activity decreases, unemployment increases, and the economy slows and inflation falls. So that's the goal. But our economy is a complex machine. It's not easy to predict or control. If the Fed doesn't hike enough, inflation gets worse. If the Fed hikes too much, our economy will roll into a recession. The Fed is hoping for what's called a soft landing, where the economy slows, but we still manage to avoid a recession. The FOMC met this week, and it appears that they are pivoting from their higher for longer stance to an easing mode. They won't tell us when the rate cuts will start, but the dot plot survey of Fed members puts high odds that the first cut will appear at their March meeting. This apparent pivot sparked a continuation of the rally in mortgage rates, which we've had for about a month now, helping us reach lows not seen in about 4 months. Here are the national averages. Conventional 30-year fixed rate, 6.62%, that's down 0.43 from a week ago. 15-year fixed rate, 6.15%, down 0.32. FHA and VA 30-year fixed rates, 6.13%, down 0.26 from a week ago. And 30-year fixed rate jumbo, 7.12%, down 0.43. Although jumbo's all over the place, I've seen some rates that are lower than that, so check with me. Moving on, debt consolidation is probably back on the table. Many of our clients accumulated significant amounts of debt during COVID. The high mortgage rates made refinancing an expensive option as a way to get payment relief. But now mortgage rates have dropped by more than 1%, and it may be a good time to revisit a debt consolidation refinance. As painful as it would be to refinance out of a 3 to 4% mortgage rate, if you can reduce your overall monthly payments by hundreds or even thousands of dollars, which we've seen, it's worth running the numbers at the very minimum. Sometimes we need to balance financial principles with the necessity of meeting our monthly budget. It's just a reality. But don't forget, we still offer our rate relief program. So even if you refinance now, after you've made 6 payments on your new loan, and if rates are even better, you can refinance and we will waive all lender fees plus give a $1,000 credit towards title and escrow fees. That program will last up to 5 years. There's plenty of time for wait for that next economic cycle. I hope this information is helpful. I really appreciate your watching and reading my videos every week. I hope they're helpful for you. I'm here available if you have any questions or financial story problems. Even though I'm in the Philippines right now, I'm still working just with a slight 15-hour time difference. So just reach out. You can call me, 206-915-3742. You can email me, eric@ericismybanker.com. Look for me on social media. Just look for Eric is my banker and you'll find me. That's all I've got for today. I hope you have a great weekend. Talk to you next week. All right, there's my trike. Here's my helper, Troy. How you doing, Troy? Good. There's our carabao. Hi. What's going on? Well, hello. How you doing? Hello. He's just curious.